a dynamic economic landscape, understanding the strategies and philosophies driving the nation's top companies is more crucial than ever. Welcome to Meet the CEO, the show that brings you face-to-face with some of South Africa's most influential and visionary business leaders. The CEO of Pan-African Resources, Cobus Albertus Johannes Loots, commonly known as Cobus Loots, joins me in the studio to give insights into the company's trajectory thus far. Cobus, thank you very much for joining us.
Thank you for making time. Appreciate it.
Well, you've been CEO since 2015, serving as financial director from 2013. How would you describe your leadership style? How has it evolved to meet the changing demands of the mining industry and Pan-African Resources' growth?
Well, I'd like to think the style is collaborative. It's important that your senior people all share the same vision, and I think that's what we've achieved. And in the mining space, and one has to continue to reinvent yourself and your business, which I think is also important. It's an environment where you're constantly faced with rising costs, obviously a number of other challenges. So it's important to continue to reinvent the business and to look at the next opportunity also.
How do you think this leadership style has evolved to meet the changing demands in the mining industry? Because it has changed a lot over the last few years, hasn't it?
Yeah, 100%. And that means one has to be flexible, and you have to be open-minded. Again, sort of continuously sort of questioning the business, the way in which you do things, and seeing how we can do things better, safer, to the benefit of all of our stakeholders.
The commissioning of the Mogale tailings retreatment, MTR, that plant in South Africa, and it's part of the Mintails project, and the Nobles Gold CIL processing plant at Tennant Mines in Australia marks a pivotal moment for Pan-African Resources. How do these two projects collectively transform Pan-Africa's production profile and overall strategies, positioning as a mid-tier gold producer?
No, I guess it's not every day that a mining company gets to commission two large-scale projects within 1 year, and both of these have been fantastic successes for Pan-African. So we acquired the reserves at MTR or Mogale from a liquidator, and that was done at a total purchase consideration of just over $2 million for just a huge reserve base when we were done with all of our work. And then there were a number of skeptics, I guess, in terms of our ability to again deliver a large-scale tailings project on budget, on schedule, and for the project to deliver as we had indicated it would. So we commissioned MTR in October, and it's been running very well, and it will be a great asset for Pan-African for a number of years. And then Nobles, it's our first foray into gold production outside of South Africa. It's in the Northern Territory and Australia, and a plant that was again commissioned at record pace. I attended the opening a couple of weeks ago, and it's great to see just the difference that this operation will make for Tennant Creek, the town where it's positioned, and then also for the whole of the Northern Territory in Australia. So yes, I mean, these projects, MTR and Nobles, collectively will add about 40% to Pan-African's production profile over quite a long time in terms of a life of mine. And these projects, importantly, also are relatively low on the cost curve in terms of all-in sustaining costs, so that it reduces the group's all-in sustaining cost now, and also means that about 80% of all of our earnings will come from surface. And these surface operations are just inherently less risky and less volatile than what we find from the underground.
You've emphasized de-risk production growth. Could you perhaps elaborate on how these specific surface retreatment plants contribute to de-risking the company's operations?
Well, I think it's important that in the current gold price environment, and we have to say, I mean, the gold price that currently at hand, both in US dollars and in obviously South African rand, is excellent. So in an environment where you have the tailwinds of this fantastic gold price, one needs to produce, and you need to produce consistently. And that's really what's important to shareholders. And I think we've demonstrated with all of our past tailings retreatment projects and operations that we are able to do so. Ilikulu, which we commissioned 2018, is case in point. It's been very stable, and it's been a great cash generator for the group. So MTR will follow suit, and the life of all of the reserves we have at MTR is 20 years. So shareholders can bank on stable production, sort of 60-odd thousand ounces a year for many years. And then Nobles initially will be a life of mine of about 8 years with really attractive exploration potential. So we have every belief that we'll be able to extend the resource and reserve base and grow production in the medium term at Nobles. So, in the gold mining or any mining environment, again, it helps to have diversity in terms of your asset base, and that's now what we've achieved, where we have a number of independent operations, all of them producing.
How does Pan African Resources balance capital allocation between growth projects, maintaining existing operations, and returning value to shareholders through dividends?
That's always a tough one to answer, and there's no right or wrong answer. I guess it's exactly as you say, it's balance. And we're fortunate again that we are generating very significant cash flows in this gold price environment from all of our assets. That gives us the ability to continue to reinvest. And we've reinvested in our assets through the cycle. Case in point being the Evander underground, where over the last years we've invested close to $100 million. And that sort of investment will now bear fruit, and that asset will go, as we discussed before this interview, for a number of years still, and that's very attractive. And then obviously investing in growth, as we've demonstrated, we're able to do very successfully at the likes of MTR and Nobles. And we'd like to also think globally. We have a sector-leading dividend. We have a track record of paying very attractive dividends to shareholders. And definitely that's a track record that we will seek to maintain.
Cobus, your company's made significant strides in renewable energy, particularly with solar plants. What are your targets for increasing renewable energy reliance, and what are the key challenges and opportunities perhaps in achieving a lower carbon footprint in mining operations?
Well, Pan African is quite proud of the fact that we were the first South African miner to commission a large-scale solar plant. This was at our Evander operation. And these days, renewables and specifically solar, but for the most part also wind and batteries are pretty much a no-brainer in the environment where you have continuously escalating electricity costs. So we'll seek to expand our footprint quite aggressively over the next years. And because of the fortunate situation in terms of the gold price, we're able to do so. So, we built 10 megawatts at Evander. We followed that up with almost 10 megawatts at Barberton. And we're hoping for our board to approve a second 20 megawatt project at Evander. The biggest impediment really in terms of building these projects is the regulatory red tape and what that entails. For the rest of it, once you have these projects up and running, they generally are a great success, and the payback for effectively a utility is very attractive in the order of 4 or 5 years.
I was going to have to leave it there. Thank you very much for joining us on Meet the CEO.
Thank you for having me. All the best.
That was the CEO of Pan African Resources, Cobus Loots, taking us through the group's long-term strategic positioning and the future of mining in South Africa and further afield.